Greetings and welcome back to The Pride. My name is Muphasa El Matador. They call me the Curious Cat. My job is pretty simple. I help grow your conviction. Conviction to buy, conviction to sell, conviction to hold. And today we're looking at Blackrock, BLK. If you're new to the channel, hit the like and subscribe button because today we're looking at Blackrock. Out here in The Pride, we only invest in trends that are going to last the next decade or more. Today's trend is investing. We're looking at the company that owns the entire world. Blackrock currently has $10 trillion currently assets under management, and that's about 10% of the entire world's GDP. For perspective, when you look at companies compared to countries, that is never a thing. But Blackrock is currently sitting under United States and China. You look at the performance of Blackrock since its IPO of 1999, it's completely outperformed the market. The amazing thing about Blackrock is it's in an industry where money flows in and money hardly flows out. Over 80% of the investments that are currently in this space go into ETFs, and they usually go to the big three: BlackRock, Vanguard, and State Street. The amazing thing is when it comes to ETFs, the performance is mostly the same because you're having baskets of companies that have the same performance. So they always go to the company with the least fees, BlackRock, the biggest of them all. BlackRock was charged by the Fed to help with the pandemic. They were charged in the last crisis of 2008 to help out the Fed. They continue to dominate because they created an amazing proprietary software, Aladdin. In my opinion, BlackRock is the first fintech company because Aladdin really dominates when it comes to risk. They are managing the risk of almost every big Fortune 500 company, the risk of sovereign funds. They're just amazing. And understanding Aladdin really puts you in a position to see why BlackRock will continue to dominate this particular industry. BlackRock has the biggest moat. They are the largest asset manager in the world because they have high switching costs, not that high. They also have an intangible asset in the reputation that is BlackRock. BlackRock is the first, this is almost impossible, was the first company to actually host its business out of China. And that gives it a global footprint like no other because they have funds and managing funds from the richest and the most powerful countries in the world. BlackRock knows everything thanks to Aladdin. They can jump in and figure out every single scenario to buy or sell a stock, bonds, every equity, any type of investment you can think about. And when you look at their tech, they're going up to 1 billion in revenue just in that particular space. 5% or more of BlackRock's ownership is in the S&P 500. I'm talking all of the big companies. I could show you stats. In my research, I had to dig deep. I looked at the banks. I looked at the oil and gas industries. I looked at the news outlets. I looked at the big companies in the S&P 500, and I figured out it is what it is. When it comes to BlackRock, they own it all. So you get no arguments from me when you're looking at the bullish case for BlackRock, right? BlackRock has a more stable set of assets than its peers, and its well-diversified product mix limits the impact that market swings or withdrawals from individual asset classes or investment styles can have on its assets under management. Aladdin is a big plus when it comes to BlackRock's growth going forward, and they're continuing to invest in Aladdin. They partnered with Microsoft and Snowflake, and this was all recent. I think as of 2021, they partnered with Snowflake, and this partnership is going to help power Aladdin's data cloud. They partnered with Microsoft to use Azure, which is going to help its network of data centers to meet and in most cases enhance the local needs of Aladdin's clients globally. And these are continuing to bolster BlackRock in all of its segments and to put it in a position to continue to do what it does, to continue to invest on behalf of individuals, institutions, sovereign funds, pensions, you name it. BlackRock, they have it all. With that said,
we're going to look at the bearish argument. The bears, they have a weak argument, but that's always on this channel. We like to hear them out. The first, and in my opinion, the biggest one is BlackRock's enormous size. $10 trillion in asset. I mean, where do you go from there? That it could be the biggest impediment to his future growth. But there's something about this fee structure that also gives concern. The institutional client arrangement generates 29% of direct BlackRock's base management fees, despite it accounting for 57% of the total assets under management. This fee structure is an issue, especially if you want to compare this with their active managed funds, right? The active managed funds account for 26% of total assets under management. They generate 49% of the base management fees. This increases the pressure on BlackRock to get its active equity and fixed income offerings on a more stable footing. Here on this channel, we look at the risk associated with the company. We look at the financial analysis. We also look at the technical analysis. And then you call it. This is not financial advice. This is just a thesis on this particular company. I like the fact that BlackRock is continuing its push. But with that said, let's look at the risks. All investments come with risks. No risk, no reward. And BlackRock is no exception to that rule. BlackRock has an uncertainty rate that's pretty medium. They are, in all honesty, the founders of ESG, with Larry Fink actually penning the letter that put ESG on the map. BlackRock has created a reputation by building and marketing and selling both passive and active investment strategies. And these account for 80% of annual revenue. Most of it derived from fees levied from assets under management, right? And so if those fees were to drop or the assets under management were to drop, then we have issues with the operating income and cash flows. Again, this is an industry where when money flows in, it hardly flows out, but you can never say never. Another big thing to consider is because of the nature of the industry, movements in equity market prices, interest rates, credit spreads, foreign exchange rates, or all three, to cause the value of the firm's managed assets to decline. That would also be bad for business. The final thing that I see is if there's a shift from active to passive strategies, that can have an impact as well, with management fees much lower for index funds and ETFs. With all of that said, the ESG portion of their business is pretty stellar, but those are the things to look out for when you're thinking of BlackRock. Awesome. When I like to do these, I like to look at the year range first, right? We're looking at BlackRock, and the year range has been 660 to 973 United States dollars. Current price of 688 sees it trading close to the bottom of the ocean. P/E ratio of 17.29 is pretty stellar because over the decades, BlackRock has had 20% P/E ratio, 17.29, pretty good. They had decent earnings recently. That's why I had to bring this up at this particular time. Dividend yield of 2.84%. You already know, if you pay your boy to hold, your boy is going to hold. So let's look at the numbers, right? So we're going to look quarterly, and you can see pretty stellar business all around. Revenue 4.7 in the last quarter. Net income 1.4 billion. They have 30% in profit margin. We consider 20% to be stellar. 30% is pretty good. Cost of revenue, 2.4 billion. Nothing to really worry about. I'm going to look at the annual so that you can see exponential growth from 2017 all the way to 2021. And this is with the pandemic. Everyone is expecting 2022 to be a slower year. And we're predicting recessions coming in because the yield inverted and so many other things happening with Russia, Ukraine, inflation. However, I can see because BlackRock is the bank of banks, because the Fed goes to BlackRock, they have an amazing risk management profile. I would be looking at their numbers going into 2022 because if they surprise, then they will beat all of the analysts and all of the rankings that we currently have. You can see 2021, 19 billion in revenue, 5.9 net income, profit margin of 30%, stellar all around. I don't see anything surprising with this particular company. BlackRock is definitely one to have on your radar. With that said, I'm going to look at the numbers in a little bit more detail so that you can see. The only company that I compare BlackRock to is T. Rowe. However, you can check out Invesco and BEN. Okay, with that said, dividend yield, we already checked that out. PEG ratio of 1.7 is pretty stellar. You're looking at big growth going forward. I believe Ben and Invesco, I believe, has a lower PEG ratio, so you can check that one out. Strong buy ratings. EPS is at 38 over here, PE ratio 18.7. We're assuming 20 going forward with our fair market value calculated at $930. Currently trading at 688. You can see a 5% growth if it hits the low. 32% growth if you reach the average, which is really under fair market value, and a high of $1,000. It's traded as high as 973. So there's a lot to look out for when you're looking at this particular company. Everything looks good. Long-term technicals are down because of the way it's currently trading today. And yeah, with that said, let's go jump into technicals. Awesome. I love BlackRock personally, but this is not an invitation to buy, hold, or sell. I'm just going to grow your conviction, right? So I'll tell you what I did and what my team has done, and then we'll take it from there. So I got into BlackRock around $670 thereabouts in March after the dip 2021. And I enjoyed a euphoric cycle all the way, obeying the 21 EMA, all the way to almost $1,000 in November. Because it's a long hold for me, I did absolutely nothing. And I've been looking forward to an opportunity like this. And that's why this video is coming at this particular time. You can see these descending peaks. 1, 2, we're looking for a third. This one just fell off. I'll look at the daily to see how that tracks. And you can see it's finding this wide range, which is not good. This signifies a lot of pain coming in, unless we can see some strength coming into the stock at these levels, right? You can see this strong ice at 666 is continuing to hold. That would be a good place to take a position going long. Or if you anticipate more pain, I can see the 573 level, even though it hasn't been there in almost a year. So we are looking at this particular level to load the boat. And we love this particular company enough to buy some more if it gets to the 573 level. Remember, fair market value is $930. Now, I just changed this to ICE because you can see rejection multiple times at 789. Rejected here, rejected here, rejected here. So if you're going to take a position anywhere around 666, you'll be looking to get out at 787 thereabouts. If you're short, you have to think like a million people. You don't want to wait until it hits 789. You have to get out before everyone else does, because the market is honeycombed with buy and sell orders. A lot of sell orders will come in at 787. So if you're buying at 666, short term, you can trade this channel into the 780, take profits, and get out. However, if you're long like me, you'll be looking to accumulate as many shares as you can going down and look for it to break above 822 and sit on 822 comfortably. That would be a good springboard for it to hit our price targets of $910, $1,000. Fair market value is $930. Right now, it's trading in these descending peaks. So it's a good time to take a look at it and see what comes next for BlackRock. If you like content like this, don't forget to like and subscribe. If you would like to see how we are trading BlackRock on a day-to-day, week-to-week basis, hit the Patreon link and come join the team. We're an amazing group of individuals. We do the simple things consistently. We trade, we invest, we research, we do technical analysis, the simple things. We would love to have you. With that said, it's Muphasa El Matador. I hope I've been able to give you the conviction to buy, hold, or sell. Peace.